Good morning. As the saying goes, now for something completely different, in a completely different language. It really is a pleasure to be here. I'm going to see if I can move this without dropping it. We're just emerging in Canada from COVID, and we had our first in-person event just 2 days ago. And so the expression, I'm happy to be here, I'm happy to be anywhere where there are people now, and I'm not looking at a TV screen, so it's wonderful to be here. I was sharing with Gregory last evening. My father was in the Canadian Navy during the Second World War, and so some 75, 80 years ago, he sailed the waters off of here during the war, and I wish he were with me here today so that he could see me back here. I doubt neither he nor I ever thought I would be here, and following in some ways in his footstep. My only regret is I only have today here. Speaking of climate change, we have a hurricane headed for the part of Canada that I'm living in, and so I need to get back there before it arrives. The good thing about a hurricane is you can see it coming for a week or so I have some time to prepare. As was said, I'm here in my capacity as president of the Global Federation of Insurance Associations. We're a voice for the industry, a global voice for the industry. Michaela serves as our secretariat. Gregory has been an important and valued member of the Federation over the last several years. And we try, by speaking with international regulators, we try and improve the efficiency and their understanding of the work that the industry does. The companies that we represent account for about 90% of the global premium volume. So we do represent, obviously, the vast majority of the industry. And it has helped us on the international stage, but it also helps us domestically. I know that I have used a great deal of the good work that GFIA has done back in Canada. Now, I know a good chunk of your discussion today is focused on the future, which is always timely, but no more so than today because of the era that we live in and the complexity of challenges that continue to be thrown at us, as previous speakers have so clearly laid out. Our changing climate continues to contribute to severe weather events that are putting more people in harm's way. Changing technology is creating new threats for companies as they all struggle with cybercrime. Risks continue to evolve and emerge, and as we've heard, customers' needs continue to change. So not surprisingly then, when we look at the reality of today's marketplace, we see a disconnect. More and more, we see a gap between the amount of insurance that makes sense for people and the amount of coverage that they are actually buying. And that gap, unfortunately, is getting larger. And that's a problem for customers, that's a problem for us as an industry, and it's certainly a problem for the economic health of the countries that we live in. And it's a problem that goes well beyond just short-term financial implications. If customers aren't buying the coverage that we're offering, or if we're not offering the coverage that customers want and need, then how can we remain relevant in their lives? Which really goes to the very core of what insurance is, filling those customer needs. Now, we'll hear more about this afternoon. Michaela will be on a panel that will be talking a bit more, but it's a topic that poses a massive challenge for our industry, and as we discussed last night, a topic that we've been discussing for many years. And it's one that I'm spending more and more time debating with international colleagues, but also at home with my members in Canada. And here's the message that I'm delivering to my members. And it is that we need to be able to help protect people against the threats of tomorrow, not just the threats of today, or even worse, the threats of yesterday, but rather the threats of tomorrow. We need to work harder than ever to understand what our customers want and what they need, and what they will need in a year or a decade from now. And so that can mean altering or improving forms of existing coverage. It can also mean branching out and offering new forms of coverage and moving away from what we normally cover. Now, the numbers show the scope of the challenge. Natural disasters, many of them influenced by our changing climate, resulted last year in global losses of $280 billion. And less than half of that, according to Swiss Re, was insured. Floods, wildfires, extreme heat, the risks may vary on where you live, but the reality is that the changing patterns are apparent the world over. And the threats are intensifying, with most countries still struggling to adapt to these new climate-related challenges. And then, of course, there's cyber. Ransomware and cyber attacks on both supply chains and critical infrastructure pose a greater threat than ever to companies and society at large. In our world, cyber-related premiums around the globe are expected to rise to $22 billion by 2025 compared to $9 billion last year. Now, as a potential business line, cyber is particularly difficult and complex. We all know that. But we still need to ask ourselves, are the products we offer keeping pace with the nature and the scope of the challenge? Corporations, small businesses, and yes, even insurers face growing vulnerability from extortionists. Ransoms are rising along with the sheer number of attacks, one every 11 seconds, according to Cybersecurity Ventures. So, what are we doing to close these gaps? Gaps in protection are by no means a new phenomena in our business. As I said, we've been talking about this for many years. For instance, in North America, there has long existed a gap between how much life insurance people buy and how much they are likely to need. For some, that can lead to catastrophic financial challenges. And insurers work hard to try and make certain that more people are protected. But according to LIMRA in the US, they are still looking at a $12 trillion mortality protection gap. Now, the number is so enormous that it almost defies comprehension. But here's what it boils down to. It boils down to a series of individual decisions that person by person, family by family, people are deciding to forego life insurance or choosing a policy that is unlikely to be sufficient to meet their needs. And that should be concerning to all of us. In terms of weather events and other disasters, Swiss Re tells us that the global protection gap was $161 billion in 2021. And that's putting an increased burden on individuals and on public treasuries. It's a burden that is likely to continue to grow in the coming years, especially in expanding cities and densely populated areas that are exposed to rising temperatures and heavier precipitation. More people will find themselves in harm's way, more property will be put at risk. And we can expect the same, and much of the same, on the cyber front, as malicious forces target a wider range of companies and organizations. So how do we close the gap? Well, first of all, we need to fully understand the scope and the nature of the challenges that we face. And that's why GFIA has commissioned a comprehensive global study. It will define and quantify the protection gap, taking into account natural catastrophes, cyber threats, and retirement. And you'll hear a bit more of that this afternoon from Michaela. But even as work on this study continues, we can begin to make a collective effort to better understand which levers will result in meaningful progress towards closing gaps. And one of the most effective ways to do that is to examine and learn from best practices and case studies. So with that in mind, let's consider the protection gap in retirement savings and how insurers in the US are helping to address it. Saving for retirement there has been a growing challenge, especially in minority communities. More people are living paycheck to paycheck, finding it hard, if not impossible, to save for the long term. And the retirement gap, not surprisingly, has only grown since the onset of the pandemic. But spurred on by the insurance industry, new legislation is making it possible for more people to achieve a financially secure retirement. It does this by reducing barriers to long-term savings and improving access to workplace retirement plans. People will have more tools at their disposal to build their savings over years and over decades. There is, of course, much more to do, more ways to help people achieve the retirement that they imagine, but every step forward counts. These recent changes show how the insurance industry, working with elected officials, is helping to close the protection gap on retirement savings. Meanwhile, insurers themselves have put in place new strategies to reach out to underserved communities and begin to address the challenging gaps that affect minorities. I quickly want to share one other case study with you from my own country of Canada. And one of the growing challenges that we've been experiencing across our country is flooding, as I know parts of your country has also suffered from the same. More severe weather events are leading to more homes and businesses being at risk. And to be blunt, we're seeing more catastrophes more often. As an industry, we've therefore been encouraging better land use planning, and as Gregory told me last night, something that you have been attempting to do here. And smarter decisions by governments when it comes to rebuilding or relocating individuals. But we've also put a priority on working with governments to help make flood insurance more available and more affordable. Right now, we're focusing on about 1.5 million homes in Canada. These are places that are at such high risk for flooding that private insurance is either unavailable or, for most, unaffordable. I see this as a good example of how the public and private sectors can come together in partnership to address an emerging challenge. In this case, a gap between the insurance that's available and the insurance that's needed. Now, sometimes closing that kind of a gap is beyond the ability of the industry to do it on its own, and that's when a joint effort of government and insurance makes sense for all concerned. As we ourselves have learned and benefited from the experiences of our colleagues in the UK and France. The joke I used to tell in Canada about flood insurance was we were the only G7 country that didn't have a national flood insurance program, but the other 6 programs didn't work. We're getting better at it. The UK program is much improved and is working, and we'd like to model the Canadian solution a little bit after what the British have done. But it shows how focusing on best practices in other jurisdictions can help multiply the positive impact of smart ideas. Now, I just want to be clear, the Partnership on Flood in Canada that we're pursuing is intended to be a temporary measure. It's meant to buy us some time as other public policy measures are put in place to more concretely adapt to the impacts of our changing climate. Things like, as I said, better flood maps to better identify risk, new zoning measures to reduce or eliminate building on floodplains, and meaningful initiatives to increase individual and collective resilience to flooding and to climate change more broadly. Now, in conclusion, as we look to the future and to the challenges that are likely to intensify, we have twin responsibilities as an industry. We must continue to do our part to protect people from risk, as we've always done, and educate them about new and growing threats. And we must reach out to government and work in the public interest to close the protection gap through partnerships. Insurance is an essential tool, but it's not a panacea, especially in a time of evolving risk. But we all have a role to play. When we come together, when we work in partnership, we better equip ourselves as a society not only to confront, but also to overcome the growing risks that we face each and every day. Thank you so much for the invitation to address you today, and I wish you a very successful conference. Thank you.